Stock trading, forex trading, and crypto trading are all forms of financial trading, but they differ in several key aspects. 1. Assets traded. Stock trading involves buying and selling shares, ownership units, of individual companies listed on stock exchanges. Forex trading involves trading currency pairs. For example, trading the euro, EUR, against the US dollar, USD. Crypto trading involves trading digital currencies or tokens like Bitcoin, BTC, Ethereum, ETH, etc. 2. Market structure. Stock trading, typically conducted on regulated exchanges such as the New York Stock Exchange, NYSE, or Nasdaq. Forex trading, conducted over the counter, OTC, through a global network of banks, brokers, and financial institutions, rather than a centralized exchange. Crypto trading primarily occurs on cryptocurrency exchanges, which may vary in terms of regulation and structure. 3. Trading hours. Stock trading generally follows the operating hours of the exchange where the stock is listed. Forex trading operates 24 hours a day, 5 days a week due to the global nature of currency markets. Crypto trading also operates 24/7 since cryptocurrencies are traded globally and are not tied to any specific market hours. 4. Volatility and liquidity. Stock trading. Stocks can experience volatility, but liquidity varies widely depending on the company and the exchange. Forex trading. Major currency pairs are generally highly liquid, but volatility can vary depending on economic events and geopolitical factors. Crypto trading, known for extreme volatility, with significant price swings in short periods. Liquidity varies among different cryptocurrencies. 5. Regulation. Stock trading, highly regulated by government authorities to protect investors and ensure fair market practices. Forex trading, less centralized and more loosely regulated compared to stock trading, with regulations varying by jurisdiction. Crypto trading, regulation varies widely by country, with some jurisdictions imposing strict regulations while others have a more lenient approach. 6. Investment considerations, asterisk. Stock trading, asterisk often considered a long-term investment strategy, focusing on company fundamentals and growth potential. Forex trading, asterisk involves speculating on currency fluctuations, often influenced by economic factors and central bank policies. Crypto trading, asterisk can involve both short-term speculation and long-term investment, with considerations including technological developments, adoption rates, and regulatory changes. In summary, while all three involve buying and selling financial assets, stock trading deals with shares of companies, forex trading involves currency pairs, and crypto trading revolves around digital currencies. Each type of trading has its own characteristics in terms of market structure, trading hours, volatility, liquidity, regulation, and investment considerations. Traders typically choose based on their risk tolerance, investment goals, and understanding of the specific market dynamics.